Hello friends, how are you? Hope you are doing well. Today our topic of discussion is about ESG integration in investment analysis and decisions. So what is ESG integration in investment decisions? So as per the United Nations Principles of Responsible Investment, which defines ESG integration as the explicit and systematic inclusion of ESG issues in investment analysis and investment decisions. And another way, ESG integration is the analysis of all material factors or materiality topics in investment analysis and investment decisions, including ESG factors, environmental social governance factors. So, what investment practitioners are doing for ESG integrations? What are their actions for ESG integration? They do analysis of financial informations and ESG information, financial and non-financial information analysis. Then identifying the materiality financial factors and material ESG factors as well. Then assessing quantitatively and qualitatively the potential impact of material financial factors and ESG factors on economic, country, sector and company performance. And making investment decisions, those include considerations of all the materiality factors including ESG factors as well. So how do investors integrate ESG? As per the PRI, United Nations Principles of Responsible Investment, which defines ESG integration, as I said earlier, this is a systematic and explicit inclusion of material ESG factors into investment analysis and investment decisions. It is one of the three ways to incorporate responsible investment into investment decisions alongside thematic investments and the screening process. So why is ESG integration is so important for us? So ESG integration can support the analysis of corporate decisions that affect operational efficiency and future directions, as well as increased risk adjusted returns and the long term viability. So ESG integration also aiding in the assessment of the risks and their associated opportunities in business and their portfolios. Next is, what is the integrated ESG reporting? So ESG reporting, integrated reporting helps businesses to tell a complete story about what drives their success by addressing both company performance matrices as well as the ESG factors as well. So it provides investors with a clearer understanding of how ESG contribute to business value creation over the time. So long-term value creation with the help of integration of ESG. Why integrating ESG into the business could be the key to its resilience. So long-term value creation by considering materiality, ESG opportunities and the risks, and improved brand reputation among the consumers, employees and investors, and improved market differentiation through strategic positions in the sustainability. Next is improved relationship with the stakeholders also help the business in business resiliency actually. Next question is, what is an ESG matrix? So ESG matrix is nothing but including materiality information about strategy, governance, performance and the future prospects. So integrated thinking principles provide a structured management approach to adopting integrated thinking, and it serves as a stepping stone to create more value and enhance decision making by boards and the top management. Next is, what is the role of ESG integration monitoring manager? So to review investment performance and managers integration practices, asset owners organize periodic monitoring meetings with the investment managers and ask them to complete the questionnaires, regularly report those feedbacks, and or use methods such as peer analysis, internal scoring system and portfolio analytic tools as well. What shall be steps in structured ESG integration? So let us start the steps. The first step applicable to all the investors is to get senior management buy-in regarding the benefits of integrating ESG factors into the investment process. So convincing the top management about the benefits of ESG integrations, structuring the teams, the capable and competent teams, sharing the data, reviewing the research, monitoring the risks, analyzing the ESG performance, and integrating active ownership practices. Next is how to check and what are the checks to ensure effective ESG integration into investment analysis and investment decision making. So, these are the following checks which can be used to ensure effective ESG integration into the investment analysis and investment decision making. Let's start with that. So, first one is, have there been any changes to your ESG integration process over the reporting period, like additional resources, information sources? If so, then why these changes? Which integration practice or tools have worked and have not worked over the reporting period and why? What are some specific examples of how ESG factors have impacted investment decisions? And what are some specific examples of the major ESG risks that you identify in the holdings in the portfolio over the reporting period? And what have you done to mitigate them? So we follow risk management practices. Have concerns over tracking error prevented you from divesting a holding with high ESG risks? If so, what is a specific example for this? Okay, and next is, what are some specific examples of ESG factors contributing to buy and sell decisions? Example, are there any examples of instances where the business choose one company over the other due to ESG considerations? Next is, what are the specific examples of valuations being adjusted due to an ESG factor, and how did this impact the investment decisions? Regarding the recent revelation about companies X in the portfolio, why did you buy or hold or sell the stocks or increase or decrease your holdings? Next is, how was ESG information that had been gathered through active ownership activities used to identify investment risks and opportunities, and what impacts has this had on investment decisions? How have you ever measured success of engagement? Was this quantifiable, and if not, what were the quantitative results out of the engagement process? How are the portfolio managers involved in active ownership of the activities? And what are some specific examples of engagement activities or the voting outcomes resulting in a stock being sold or bought? Thank you very much for the now. We'll discuss in the next meeting new topic. Thank you.